Hi, this is Mike Maloney with your gold silver market update. And I want to thank everybody that has been watching episode 7 of Hidden Secrets of Money. It is the one that is playing out right now. And if you just add, while you're watching this, just add coronavirus to it. Just imagine the COVID-19, this outbreak, the economy being shut down, and then the baby boomers and everybody else getting scared. All of the bankruptcies that will happen from businesses being shut down during these quarantines, the bailouts, the amount of currency creation. We'll get into a little bit more of that a little later with some of the viewer comments. So I want to go right over to some of the news. So, Boeing is probably going to be bailed out. Trump administration wants to send $500 billion in payments to Americans in 2 rounds. That's more than $1,500 per person in the United States. And it's not going to stop. This is the beginning of that. And so it just means currency creation, which means that eventually all real things have to go up in price because they are measured by the number of units of currency. The gold and silver, gold has been noodling sideways, bouncing up and down above and below 1,500. Silver has dropped more, causing the gold-silver ratio to go over 124, which is, and I said a few days ago, once it broke 100, I said this could go to 150, and I still think that it could. And so, I'm just going to try and buy more and more silver as we go. And then take a look at some of these stories. Oil falls 24% in third worst day on record. And, oil is back down in the 20s. And so this is extremely deflationary. It's good news for some producers where a high cost, like in the mining industry, very high portion of their cost is energy. And so that's good news for them. It reduces their costs. But all of the American oil companies now are all these shale oil companies, the places that have a cost of $30 per barrel, $35 per barrel, $40 per barrel. All those companies are going to need to be bailed out also. So look for the most and the largest bailouts in history coming at us. Dow crashes below 19,000. Now, it was over 29,000. It was a breath away from 30,000 points just a month ago. And the stock markets have now lost 1/3 of their value in just 1 month. This is one of the biggest things that has ever happened in world history. Banks are going to drown in an ocean of defaults. And that is absolutely true. Imagine all the businesses that are ordered to be closed right now that still have overheads, eventually not being able to do things like make their rents and their loan repayments. Imagine all of the people that have been laid off or furloughed that have to make rent payments and still buy food and stuff. Well, they're not going to make their rent payments or their mortgage payment. And so the number of defaults that the banks are facing is going to be enormous, and they're going to require bailouts. General Motors, Ford, and Fiat Chrysler are all to close their U.S. factories, and this is one of the things that I wanted to talk about also is the coming shortages in precious metals, because we've already got a shortage. It's hard to find supply of physical. These prices that you see, these spot prices, are paper contracts that you can create in unlimited quantities. They don't require any mining. You just type a few keystrokes and they come into existence. And so that's what controls the spot price. But what you've seen is the physical price has diverged from the spot price big time. So gold and silver physical are maintaining their price or going up at this point in time. But the futures contracts are going down. I'll get into a little bit more on that in upcoming episodes. This is what a $12 trillion margin call looks like. Now, that article is about the short squeeze that's happening on people who have borrowed in dollar-denominated currency in foreign lands. They have a demand to acquire dollars, to pay them back, and to acquire them, they've got to buy them on the Forex, the foreign currency exchange. And when they do that, that pushes the dollar up, and the dollar just had a huge up day, and it's up at highs that we haven't seen in ages. So moving on to on the radar, Dan Tapiero says physical gold markets in severe shortage. Listen to our partners at goldsilver.com discuss the current conditions. That was the interview I did yesterday with Alex Daly. Questions remain. When will gold futures traders / GLT ETF holders demand delivery? And that's something I'm going to get into in a future episode, because on the futures exchange, the commodities exchange, there is a certain amount of physical gold, and it's in two categories. Eligible means it just meets all the criteria, but it's being held in those vaults by a private investor, and then registered at any time. A private investor that's holding a stock can put it up for delivery into a futures contract where he's basically selling it and specify a price. That's the registered category. And when you look at the number of futures contracts, the number of ounces that have been sold compared to the number of ounces that are available in the registered category, this is a game of musical chairs with a minimum of like 10 people dancing and only one chair to sit in. You're going to see this in an upcoming episode here. So, and when will there be enough physical gold for all the paper owners? There aren't enough. And the reply is, it's just a matter of price. I want to welcome the almost 1,500 subscribers. Just remember to hit that notification bell after you subscribe. The chart of the day. And this is from a section of the book that I am currently writing. And I'm releasing a lot of this because it's becoming outdated very quickly. I was hoping the markets would hold out until the elections. This was scheduled to be released in just a couple of months. But I'm releasing a lot in the section on the almost everything bubble, because I was writing about how almost everything is in a bubble. Anybody that calls it the everything bubble is wrong, because gold and silver are not in a bubble, and this is provable. But here we have and this is old data. This is from a presentation I did over a year ago. But what it shows is that the price earnings ratio is over, or in 2018, it was over what it was in 1929. It was higher. Now, the text from the book says there are many ways to measure whether a stock is overvalued or undervalued. Dr. Robert Shiller of Yale University, a Nobel laureate in economics, favors the price-to-earnings ratio. A PE ratio is the price of a share of stock relative to the annual earnings that company is making per share. In other words, if the PE ratio is 15, then the price of the stock is 15 times higher than the earnings the company made divided by the number of shares the company has issued. Shiller's data affirms, as stated earlier, that we are in the second biggest stock market bubble in history, the 1999-2000 dot-com bubble being number one. And we were. This is coming down, except as earnings disappear, this goes up. So when companies come out with extremely low earnings, this can actually rise on a crash like we're having. Because what you're going to see in most of these, some companies like grocery stores right now are just being bought out. So even though retail sales plunged last month, by the way, I think you're going to find out that in the next 3 to 6 months, you'll find out that a recession actually started probably in February or this month. But a few sectors are doing very well. If you look at grocery stores and stuff, I mean, they can't keep the stuff on the store shelves with the panic that's going on right now. Then, another way of looking at bubbles is dividend yields. How much dividend a company is paying the percentage on each share of stock. And another measurement is dividend yields, which are a bit like earning interest. The higher the dividend yield, the more of a bargain a stock is. The lower the dividend yield, the more expensive a stock is. Notice that I have inverted the scales on the side of this chart so that bubbles are up and undervalued is down. So I flipped the data upside down on this chart. And what you see here is that, you've got ranges of 0 all the way to 14% if you had bought at the bottom after the stock market crash in 1932, you would have been making 14% interest on your stock every month, basically. But moving on, what today's absurdly low dividend yields are telling me is that the stock markets have been in nosebleed altitude sickness hyperbubble territory for this entire century. In fact, in the first 115 years of this chart, that's from here to here, in the first 115 years of this chart from 1880 through 1995, there was no time where the stock markets have been as crazy overvalued and in danger of imminent collapse. Based on history and taken together, these two charts are telling me it's an extremely safe bet to buy stocks when PE ratios are below 10 and simultaneously dividend yields are above 6, and then hold them until PEs rise to 20 and dividends fall below 4 and then sell. It also says to run for your life if PEs exceed 25 and simultaneously dividend yields are less than 3.5%, and that's exactly where we are today, or exactly where we were a month ago. And so basically the book was saying it's time to run for your life from stocks and seek shelter elsewhere. Find something undervalued. And the only thing that's undervalued is gold and silver. Next up is behind the scenes. This is a picture, yesterday we did an interview with Alex Daly, president of goldsilver.com. And so here's Alex, and this is a picture with Ryan, Alex, and myself. And Ryan heads up all of the marketing efforts. And these guys, we've got a great team at this company. And these guys work so incredibly hard. Now, right now, because of coronavirus, everybody's working from home. And they also have their kids pulled out of school. They've both got kids. And so they're trying to do home education. And these guys, Ryan and Alex, they were up until 11 p.m. Sunday night. And they do this on a regular basis. They are always working until 7, 8, 9, 10 p.m. Every single day. And we've got a lot of the rest of the crew that works exactly that hard to get all of this done. So I just wanted to show you something from behind the scenes and to really thank the guys and our crew. Ryan and Alex are just unbelievable. Some viewer feedback, and this is from yesterday's video. Never heard from Alex before. I love his input. Please bring him back on more, and we will. Probably like once a week we'll get in touch with Alex. Jim West, Mike, and everyone. I watched episode 7 again in Hidden Secrets of Money series, and I think the helicopter drops of money were back in 2008 with QE. What's going on now is when they call in the bombers loaded with money. Well, it's currency, it's not money, which will send everything spinning out of control. Does anybody else see that? Yes, thank you so much, Jim West, for saying that. And this, this was somebody that sent a message, I think, directly to goldsilver.com. I don't know where it came from. But I'm lost for words right now. I've been listening to Mike talk about silver for years, and I believed in what he said. I've invested in physical gold and silver, hoping that I would be safe through a market crash. After watching the last 2 weeks, my hopes have been dashed. Are we going to have to wait 10 more years, wasting time, hopes, and money on something the rich and powerful controls? I'm upset with myself in believing in what I thought was an expert opinion. Guess it was just games to get people to spend their hard-earned money. No matter what people do, the rich and government find a way to get the people to believe in something just to get their money. Does Mike work for the deep state? This is just another pipe dreams. Well, just for you, I created a chart to show you what happened back in 2008. Here's '08, and this is the S&P 500 here, and this is gold up here. And what you see is that at the beginning, gold and the S&P both crashed together. Gold went from 1,000 all the way down to $730. So it lost 30% in that initial stage of the crash. Then there was a divergence where gold made some massive gains and regained all of its ground, and the stock market kept on crashing until March. And then the stock market started making gains, but so did gold. It kept on making gains, and it went all the way from 730 to 1900, while the stock market never recovered its previous highs. It was over 1,400 here, the S&P, and it never recovered that. This is part of margin liquidation, which is what was happening in '08 when people get squeezed. And it's sort of to be as expected. And for me, I just held on through all of this, and I used this lower price as a buying opportunity, and I doubled my position. And I got but what you also saw in this period of time was that there were certain periods of time where dealers couldn't get any physical gold and silver. The price of gold and silver vastly diverged from the spot price, which is set by unlimited quantities of futures contracts. And as that divergence happened, shortages developed, and it's exactly what we're seeing today. And when those shortages develop, and it's going to increase further in the future because they're closing Ford and Chrysler for a while. They're going to be closing all of these mines that dig up gold, silver, copper, everything else. You can't have, during a coronavirus pandemic, you can't have all these guys working together in a cave. They're going to be closing all of these mines and the refineries and everything else. They're going to shut down for the same periods of time. So all of that supply goes away. And then there will come a point in time where people want this, the gold and silver, as a monetary hedge. It's going to be monetary demand, not just investment demand, but demand because people are scared of the dollar, and they start treating gold and silver as money once again. That's when they explode. Quote of the day. First, once again, get a free copy of my book. But here we go. Government has three primary functions. It should provide for the military defense of the nation. It should enforce contracts between individuals. It should protect citizens from crimes against themselves or their property. When government, in pursuit of good intentions, tries to rearrange the economy, legislate morality, or help special interests, the cost comes in inefficiency, lack of motivation, and loss of freedom. Government should be a referee, not an active player. That is government's function, but they want to get involved in everything and try and control everything and help everybody, and it does not work that way. Thank you very much, Milton Friedman. If you got anything from this, please hit that like button and subscribe to the channel, and we'll see you next time. Thank you.